Hey everyone, I'm Don Harkins with Your Florida House Team and Your Florida Loan Team. I am a Central Florida realtor and senior mortgage advisor with America's Money Source. We can help you with all of your real estate purchase, sale, and financing needs. So if you are in the market or you have any questions about the market, please feel free to reach out. Today, we are talking about rising rents, rising interest rates, and lastly, what's going on with all the forbearance talk in the market and all these foreclosures and short sales that we're starting to hear about in the media. The first thing I want to tackle is interest rates. Yesterday, we saw one of the largest moves in interest rates that we've seen over the past 3 months. This came as a result of some of the Fed comments about beginning to taper purchasing mortgage-backed securities. And what we saw is that interest rates actually declined yesterday, got worse. And for most borrowers, what they would see from a change of Wednesday to Friday might be the difference in 1/8 of 1% or even 1/4 of 1%, and in some cases more. Just those comments alone is enough to shake up the market. If you were floating, if you were considering refinancing, or if you are considering a purchase, the general consensus is that these types of movements are going to continue in 2022. So the rates we're looking at today, while they may be as much as 1/4% worse than they were on Wednesday, they are still likely to be better rates and are still historically low. But the overall advice here is don't float your interest rate when you've decided to purchase or you've decided to refinance. Go ahead and lock that interest rate in and begin with the process, because these types of moves in the market may become more common. The second piece of news that we want to address is the rental market. It has been on fire here lately, and there was a great Realtor.com article that I will link. And what it said is that rent price growth topped home price growth in August while rising over 10% year over year. That's the first time on record ever that rents have risen 10% year over year. The average national rent is now $1,633. That's up $169 and 11.5% year over year. Home prices in the same month grew only 8.6% year over year. Rents reached their highest levels ever in 35 of the 50 largest U.S. metro areas, and all but 4 of the 50 largest U.S. metro areas hit record highs between June and August of this year. Florida was actually one of the hottest rental markets, with Tampa and Miami both showing 25% rent gains year over year, and Tampa was actually the fastest rising rental market in the entire country. That saw a 30.6% year over year gain in rents, with the average rent in Tampa right now at $1,760. Across studios, 1 bedrooms and 2 bedrooms, 2-bedroom rents rose the fastest out of those 3 categories. So while it is expensive to purchase a home right now, when you look at sale prices and where they were 4 or 5 years ago versus where they're at today, understand that when you purchase a home, you are locking in today's pricing, and you are locking in a payment today and an interest rate today that is fixed. These rent prices, with a housing shortage that it's estimated to take as long as 10 years to correct, it's unlikely to see these rents come down. The pace of increase might slow, but by purchasing today, you're locking in your price, you're locking in your payment, and you're locking in your interest rate for 30 years. So while home prices are going up, no one is being spared here in the rental market. Prices will probably continue to rise just as fast. The third and the final piece of news we want to address is forbearance. So a lot of the major news outlets were talking about 5 million homes that went into forbearance during COVID. A huge number. There's been a lot of investors that are salivating at the idea of a huge distressed housing market and people losing their homes again and being able to pick up homes at a bargain price. But what we're starting to see is that a lot of those homes are now coming out of forbearance, and we're starting to see what the disposition has been and how borrowers are handling that. And what the numbers show us is the homes that have exited forbearance, which is about 3.5 million so far of the 5 million, 23% are currently current right now on their mortgage. They've made up their payments, they've come out of forbearance, and they are in the same home with the same mortgage, current on payments. 13% made a lump sum reinstatement payment to bring their account current. So that money that people were saving in forbearance, they were stacking away in the bank for a rainy day, didn't end up needing it, and went ahead and made that lump sum to go current. 7% paid off the loans through a home sale. There was obviously no issue selling in the low inventory market. So some people change of job, change of location, change of need. They just sold the home and paid off the forbearance through the home sale. 28% went into deferred plans or partial modifications. So about a third of all the people that went in ended up working out some type of agreement with the bank. 12% exited into a permanent loan modification. So actually closed on a new mortgage where that deferred interest was tacked on to the back of the loan. The length of the loan was extended. The rate was adjusted. Loan modifications used to be very common in the 2009, 10, 11, 12 distressed market time. Less common today, but about 12% are opting for that option. 16% canceled without a loss mitigation, meaning they're in the process of a modification or they still need to be reached. So what that means is they worked out some type of agreement with their mortgage servicer. Could have been a deed in lieu, could have been a settlement of some type, a negotiated settlement, could have been packaged with other debt. So it's about 16% canceled without a loss mitigation at all and just are moving out of the house and have no foreclosure. The sale will either be managed by the bank or will be placed on the open market. 0.65% of exits to date have been into other resolutions, including foreclosures and short sales. So out of that 5 million, 3.5 million have exited, and of that 3.5 million, 0.65% of those exits have been into short sales or other distress sales like foreclosure sales. What that means is with 1.5 million borrowers still in forbearance, a small number relative to the 5 million that were initially in forbearance, there would be about 2,400 homes that would go into some type of short sale or foreclosure. So if you are an investor sitting on the sidelines watching interest rates rise and watching prices rise in the hopes of a coming wave of foreclosures, the reality is that's highly unlikely to happen. If you're a first-time home buyer and you're waiting for a wave of foreclosures to purchase a low-priced home, that's unlikely to happen. In this type of a market with historically low interest rates while they are rising and decent affordability, the best thing you can do for yourself is to make a purchase today before prices continue to rise and interest rates, especially in 2022, start to pick up pace and come off our historical lows. I hope that's helpful in bringing you up to speed on where we're at with rents in our market. Great news for investors, not great news for first-time home buyers or people renting, but for investors and anybody who's purchased an investment property, it may be time to adjust your rents more than the recommended 3% a year. So if you need a rent study or you're curious about where your home should be at as far as the rental market pricing goes, give us a call. We can help you with an update there. But now that you have an idea of where you're at on interest rates, rising rents, and the foreclosure forbearance scenario, I hope you feel more informed and are better able to make purchase and sale decisions in this market. As always, if you have any questions, give us a call at 321-377-0341, and thank you for watching. Take care.